I mean, how difficult is it just trying to gauge the best investment opportunities, where we're headed next, given all the uncertainties, given the fact that we've heard time and time again that this scenario is playing out right now? It's unlike anything really that we've seen in the past.
Yeah, I mean, this year is just kind of like emblematic of that, right? Like coming into the year, 100% of economists thought we were going to be in a recession, 100%. Yeah. And it's still very high, right? Like I think that's very much up for debate where, the economy is going. But I think, having a balanced approach in terms of your equities, like growth and value, you've seen a huge swing over the past 2 years. If you just own them both over the same time or over longer periods, it ends up working out, right? I think right now, like I said, we are much more optimistic in terms of our equity outlook. We foresee the market hitting all-time high or new all-time highs by June of next year. And all of that's driven by earnings, right? It's all fundamental in nature. And so when we're thinking about like what we want exposure to, it does tend to be those more cyclically oriented parts of the market. So consumer discretionary, for example.
Yeah, and that goes to how far out markets are often looking as well here. When you think about how far that is, and you're already thinking about June of next year, what would be the top idea, like let's say 2023 is done. 2024, what is the top idea that your team is already evaluating, that's already kind of brewing right now?
It is. We just upgraded consumer discretionary this past month, and I think it's really actually very controversial, right? Because you have all of these like bears coming out saying that the consumer is slowing, which we do agree with. It's slowing, but from very, very fast, from very high levels. And the way that we think about it is we have this concept of what we've been calling a rolling earnings recession. It's where different sectors of the S&P 500 have gone through their earnings recessions at different times, right? And it has to do with the pandemic, right? Supply chain disruptions, different lockdowns happening, the shift from consumer goods to consumer services. And so what we've already seen in the consumer discretionary sector, particularly on an equal weighted basis, because you know that there are two companies that make up a large part of that, it's actually already been through that that earnings recession period. And so you're starting to see they've already done cost cutting initiatives. And so thinking about that, a reacceleration on the top line, but also having margin, they've had margin support in the fact that they've already cut costs. That's why we're more positive on the consumer discretionary sector.
Abby, great to have you here in studio with us. Thanks for coming out to Times Square, Yahoo Finance Live here this morning. Abby Yoder, JP Morgan Private Bank, U.S. equity strategist, joining us live in living color. Thanks.
Thank you.